Very good morning, everyone. So let's start with the next practice session on deductions. So this is again from the study material. There are some good questions from the study material. That is the reason I'm picking them up. So this is page number 6.68 of the study material, illustration number 17. It says that Mr. A has commenced the business of manufacture of computers on 1/4/2024. Okay. And he employed 350 new employees during the previous year, the details of whom are as follows. So he has employed 350 employees. Okay. We'll read the details later. So let us see what we need to do in this question. The regular employees participate in recognized provident fund, while the casual employees do not participate in RPF. Compute the deductions, if any, available to Mr. A for assessment year 25-26 if the profits and gains derived from the manufacture of computers is 75 lakh and his total turnover is 10.16 crores. So here we are required to compute the deductions, if any. So they have not told us that which deductions is available. Now we understand that if the assessee is such an assessee who is required to get his books of accounts audited, right? See, his turnover is 10.16 crores. So we understand any person whose turnover is more than 1 crore is required to get their accounts audited. There is again one of the condition of 10 crore also if you are if most of your transactions are in banking mode. So this person is turnover is high. He is required to get his accounts audited, and he has employed some workmen. He has employed some 350 new employees. So we understand there is an important deduction, which is what 80. Which one? Anybody remembers that deduction? Double J double A. Correct, na? So we have 80 double J double A. This says that we will give you deduction with respect to the new employment. If you have given new employment, so this since this assessee has just started his business in this year. So what does new employment means? New employment means that as compared to the last year, if your number of employees are increasing, so that increase in the number will whatever the wages you are paying, 30% of such wages or salary would be the deduction under 80 double J double A. So in this case, since he has started the business this year, so what was the number of employees in the last year? Zero, because there was no business. And in this year, he has started 350. He has actually recruited 350 employees. So now the number has increased by 350. So whatever the salary or wages we are giving to 350 employees, it is it will come under deduction under 80 double J double A, but 30% of such wages. See, giving salary wages is a business expense. This is we will get, but additionally 80 double J double A also will receive. And double J double A is such a deduction which is available under both the regime. It is in optional regime also. It is in default regime also. So 80 double J double A is available in both the cases. But there are certain conditions that such employees should be majorly your factory workers. So you should not give them a very high salary or remuneration. The maximum remuneration or salary or wages, whatever you are giving to them, it should be maximum 25,000 rupees. If you are giving more than 25,000 rupees, we will not give you deduction of 80 double J double A. So first of all, the eligible employees are whose salary is not more than 25,000. Up till 25,000, we are okay, not more. Second is that they should be your regular employees. Regular means that who participate in recognized provident fund, and the employees who does not participate in RPF, we will call them casual employees. No, we will not give it because we want that it should be a real type of employment you are giving. So it should be regular employees. Third, that the number of days they would have worked in your organization is minimum 240 days. So minimum 240 days they would have worked in your organization. But in case of leather, footwear or apparel business, do you remember how many days? It is not 240.
150 days, sir.
Correct. Very good, Vignesh. It is 150 days in case of leather, footwear or apparel. Leather, you understand. Footwear, you understand. Apparel, clothes, you understand this. So in that case, 150 days. So here, this guy is in the manufacture of computers. So for manufacture of computers, 240 days is required, right? So if we will see that the details of 350 employees is given 75, 125, 50, 100, and out of them, there are few employees who are getting more than 25,000. So they will not be available, will not be eligible to get the deduction. So here, these employees, they are getting 26,000 rupees. Everybody is okay with this? Correct? So
Yes, sir.
26,000 they are getting, so they will not be eligible anyways. Second, they have also mentioned that only the regular employees participate in recognized provident fund. Casual employees do not participate. So in that case, there are some casual employees also. They will also not be eligible. They will also not be eligible. So only these 75 employees can be eligible because they are regular employees as well as their monthly emoluments. Emoluments is nothing but remuneration, salary, wages, etc. So it is not more than 25. And here it is also not more than 25, it is 24,000. Now, the only thing which is left is whether they have worked for 240 days in this year or not. So if we will see these 75 employees, they were recruited on 1/4/2024. So if we will see in our previous year 24/25, they have worked for more than 240. In fact, for the entire year they have worked. So these guys are eligible to get the reduction. But these people actually they have joined the organization on 1st September 24. So if you will see from 1st September 24, so from 1st September 24, it is approximately 7 months, right? So I'm not calculating it accurately, just roughly, rough calculation, rough estimation. So it is from September onwards. So from September onwards, it is just 7 months, right? And 7 months, roughly, if I'll calculate 30 days for each month, so it is coming
200
as
days.
210, almost 210. If I'll calculate one more day, some months have 31 days. So it would be 211, 12, 13, 14, etc. Right? So it is not touching 240. In any case, it will not touch 240. So these people are not eligible in this year. So only these people are eligible in this year. So whatever the emoluments we are giving to them, so let's say we are giving how much? Number of employees is 75 and 24,000 per month we are giving. So for two in 1 month, how much is the expenses we are making? So we are making 75 into 24,000 is the expense for 1 month into 24,000, right? And for how many, for how much remuneration we have paid for the entire year because they were recruited on 1st April. So for the entire year into 12. So this is the total remuneration which we have paid and we will get the deduction of 30%. So it is in consecutive first 3 years you will get. The first 3 years is not that important for the examinations, but please remember 30% you will get. 30% this year, 30% that second year, 30% third year, right? Whatever the remuneration which you are paying to them. So right now we are concerned with just 1 year. So 30% of that. So I think that you can easily
Sir,
calculate. Yes, please.
sir, even if there is increment next year and the salary is going above 25,000, will you get 30%?
No. The thing is that these employees should have remuneration of not more than 25,000. The second year, if it is going more than 25,000, you will not get in second year.
Okay, sir, got it.
The purpose of the section was, I told you in the class, the purpose of the section was to give employment to actually unskilled people who are not that educated. So you will not give more than 25,000 to them. So generally to workers, how much you give? 15,000, 20,000, that's it, right? So it would
Okay, sir.
be 75. So just multiply it. 75 into 24,000 into 12 into 30%. So this is 64 lakh, 80,000. Are you okay with the 64 lakh, 80,000?
Yes, sir.
Guys, my screen is clear or not?
Clear, sir.
Clear. Okay, thank you. So it is 64 lakh, 80,000. So Ganda, you got it? Okay, 210 you actually given me the number of days. Okay, got it. So 64 lakh 80,000 is the deduction which is available. Please remember this deduction cannot be more than the profit from your business. So here it is written that he has a PGBP income of how much from this business? 75 lakh. So from 75 lakh, we can give this deduction 64. It is not more than the profit from this business. So we understand that these deductions are given from GTI. These deductions are given from GTI. So let's say from this business, he has PGBP income 75 lakh And let's say for example, he has some other income also. Let's say IFOS income also. It's not casual. Let's say he has IFOS income also of rupees 20 lakh. The total his GTI is 95 lakh, right? And we want to give a deduction of 64.8. So you understand that 64.8 we can easily give the deduction because this deduction cannot be more than my GTI, specifically from my normal income. PGBP is normal income, other IFOS, it is not casual. That is also normal income. So 64.8 you can give. But actually, while giving this 80 double J double A, 80 double J double A, this deduction should not be more than the profit from such business. So what I am saying to you, although your GTI, so you should not with respect to 80 double J double A. In fact, this provision is for all the sections which lie between 80I to 80 RRB, which lie from between 80I to 80 RRB, and most of the sections 80 IA, IB, IC, etc. It is not in your syllabus. So generally, for your syllabus, which is relevant, is 80 QQB and RRB is there, but in QQB RRB, the formula is such that this deduction cannot never go more than the income of royalty income. But 80 double J double A is only the one section which is left, which is in your syllabus, where you might make a mistake that you are giving a deduction even because you are having an impression in your mind that sir, my GTI is 95, I can give 64.8. Okay, right now you can give 64.8, but ideally you should compare it with the profit of from such business. So let's say, for example, this deduction would have been, let's say 76 lakh, for example, the 30% of the emoluments which come to let's say be 76 lakh. Will you be able to give the deduction of 76 lakh? So some students will think, okay, my GTI is 95. Guys, are you understanding what I'm saying?
Yes, sir. So we'll give 75 only.
Correct.
Yes, sir.
So we will give only 75. Got it? Very good. So in this case, my PGVP is 75, so we can easily safely give 64.8. Now, they are saying, what would be your answer if Mr. A has commenced the manufacture of footwear? So, what would have been your answer in that case? If he has started the business of footwear. So, we understand for footwear, we don't take 240 days, we take only 150 days. So, in that case, these employees would have also have been eligible because they were coming approximately, you told me, Sugandha told me 210. You also told me 210. So, this would also be eligible. So, in that case, what would have been the answer? So 100 employees, they are getting 24,000 per month. So, and from September onwards means 7 months. Just calculate that there are 100 employees. See, now in case of footwear, these are eligible, these people are eligible. First and fourth point employees are eligible. So 100 into 24,000 guys into how much? 12 or 7 from September onwards?
7.
7 into 30%.
50 lakh 40,000.
50 lakh 40,000. So now the total deduction of 80 double J double A, which is coming as 64.8 plus 50.4. So which is
1 crore 15
75
lakh
lakh
20,000.
correct. 1 crore 14,
15 lakh 20,000.
15 lakh 20,000. Okay. So 1 crore 15 lakh. Guys, now there is a issue that we cannot get a deduction of 1 crore 15 lakh. So maximum how much deduction you will restrict yourself?
75 lakh.
75. Got it?
75 lakh.
Got it, guys? So this is 80 double J double A. And generally, this section is little important, little important. Few years back, they used to ask these sections very often, but right, since last few years, they are not asking it. But this is again, it's an important section. You can't deny this. And this deduction is available under both the regimes, under optional as well as default. So we are not doing it, guys. In writing, we are not doing it. I believe that you have understood this. Okay. Okay, let us do some deduction of 80 QQB also. That is again an important deduction. Illustration number 18. It says, Mr. Akash earned royalty of 2,88,000 from a foreign country for a book authored by him being a work of literary nature. Okay. So Mr. Akash has earned a royalty and it's from the foreign country he's getting this. So it's okay if he, even if he's getting from the foreign country. But please remember that 80 QQB is only available to a resident individual. So if nothing is mentioned, so Akash can be a resident individual, but his book is published outside India and he is getting royalty from outside. No issues in that. So this is his PGBP income or IFOS income, whatever you want to call it. The rate of royalty is 18% of the value of the books. The rate of royalty is 18%. Okay. So this will become your PGBP income, but we understand while giving 80 QQB deduction, we don't take more than how much percent? Do you remember, guys?
1%,
How much percent? How much percent? Try.
0.1%.
15%. We don't take more than 15%. So it is actually 18%. So the maximum deduction in 80 QQB is 3 lakh rupees or 15% of the value of the books, right? So if this would have been, this amount would have been, let's say, 14%, 13%, 15%, we are okay with this amount of giving deduction. But right now it is 18%. So while computing QQB, will take not more than 15, 1 5. I'll show you how. The expenditure incurred by him for earning this royalty is 40,000. So these are the expenses incurred. Now, see, royalty income, let's say you are an author. For example, if you are a professional author, the main purpose of the assessee, the main objective of the main profession of the assessee is that writing books. So you can take it as a PGBP income also, and expenses are allowed. So 288 minus 40,000 would be the PGBP income, 248. Even if the assessee is, let's say, he's not, it is just an hobby that he writes these books. So, but his main business or profession is something else. So it could be IFOS income also. So it doesn't matter. You can make it PGBP, you can make it IFOS. Both are correct. My recommendation: make it IFOS. Right now, the amount remitted to India till 30th September 2025 is 2,30,000. So this is the amount remitted up till 30th September. The remaining amount was not remitted till 31st March. Compute the amount includable in the GTI of Mr. Akash and the amount of deduction which will be eligible under 80 QQB if he has exercised the option of shifting out of the default tax regime. You understand, in default tax regime, QQB is not available. Only CCD2, CCH2 and JAA is available. QQB is not available. So he's again, but he is opting for the optional regime. So I would like to write this question. So please do write with me. Illustration number 18. Let me compute the computation of total income of so and so assessment year 25-26. This person is following optional regime. Correct. Now, we have not been given other income. Any other income we have not been given. So we'll assume that this is the only income which the assessee is having. So his IFOS income is, this is the royalty from the books. So whatever is the royalty from the books, it is more than 15%, less than 15%, doesn't matter. Whatever is the royalty, make it as an income right now. It is only for the purpose of QQB. When we'll be giving the deduction, then we will be taking 15%. Otherwise, we are completely okay, whatever the royalty which he's earning. So this guy is earning a royalty of 2,88,000 and there is an expense of 40,000 also. So these expenses are allowed whether you are doing PGBP, expenses are allowed. If you are doing IFOS, expenses are allowed under section 57. Even if you don't remember the section number, that's okay. But you understand, in IFOS, expenses are allowed. But expenses are not allowed from the casual income. If there is any casual income, do you remember? You won a lottery ticket, you won a lottery and you have purchased a lottery ticket. So the lottery ticket expenses are not allowed. But for other expenses, these are allowed. And if you remember, in IFOS, dividend is also one of the thing that where if you have taken a loan to invest in the shares. So the interest is allowed, but it is restricted. Do you understand? It is restricted to 20% of the dividend income. Okay. So this is 2,88,000 minus 40,000. 288 minus 40,000. So my IFOS income is 2,48,000. And this guy is not having any other income. So 2,48,000 is his GTI. Agree? Smriti? Siddharth? Agree?
Yes, sir.
Okay, good. Less. Now deduction.
Yes, sir.
Yes, Bala, tell me.
No, sir, I said okay.
Okay, good. Deduction under section QQB. Deduction under section QQB. And how much is QQB? See, A, royalty income. Leave one or two line. Or rupees 3 lakh. Whichever is lower. So whichever is lower is the deduction under 80 QQB. So 3 lakh is the fixed amount. And how much is the royalty income? When I say royalty income means after expenses. So is it after expenses we can take 248? The answer is no. Here, actually, this amount is actually 18%, which is more than 15%. So we can take this amount. So when we'll be computing the royalty income, you can also write it net for your reference. Otherwise, for an examination, don't write it. But for your reference, you can write it the net amount. Net means net, not after TDS. Net here means net of expenses. So, okay, I'm not writing it unnecessarily. We'll get confused. So royalty income is after expenses. So what is the royalty income we will take? We'll take that this amount should not be more than 15%. If it is up till 15%, we would have been okay. But it should not be more than 15. So it should be 2,88,000 divided by 18 into 15. So how much we will get?
2,40,000.
240. Okay. So it would be 2,40,000 minus expenses. Minus expenses is how much? It is 2 lakh rupees. Got it, guys? So this royalty income we will take not more than 15%. So 240 minus expenses 2 lakh rupees. Now, if this person is getting this royalty from within India, then there is no problem. If the publishers are within India, they are giving the royalty, then there is no problem. If this royalty is getting from outside India, let's say my book is published outside India and I'm getting a foreign royalty. So this royalty should have been received within 6 months from the end of the previous year. It should be received, this amount should have been received within 6 months from the end of previous year. So our previous year is what? 24-25. So it is 24-25. Just go to the end of this year. End of this year is 31st March 25. And within 6 months from the end of the previous year. So if I add 6 months to it, I'll get 30th of September 25. Guys, do you understand how I got 30th September 25? Should I repeat it once again or you got it?
Got it, sir.
Correct.
Like, can you repeat on sir?
Bala?
Sir, can you repeat on sir?
Sure. So if this royalty, if you are getting from within India, Bala, then there is no problem. Within India, you are getting, then there is no problem. But if you are getting this royalty from outside India, so there is a provision in 80 QQB, in QQB and also in RRB also, the same provision is there. What is QQB? Royalty on books. What is RRB? Royalty other than books. Almost the same provision. But in RRB is much easier. In RRB, there is no such problem of 15% also. It is only with the books that we have 15%. In RRB, there is no such problem of 15% also. Okay. Now, QQB says that if this royalties you are getting from outside India, let's say from foreign country, from USA, you are getting it. So this should have been brought into India in foreign currency within 6 months from the end of the previous year. So you will say to your client, boss, have you received this royalty from outside India or not? And he will say, okay, sir, I have received it within the year itself. So we are okay. He will say, yes, sir. In fact, once this year was over, I have received this royalty within 1 month, within 2 months, once the year is over. So when the year was over, this is the previous year, right? The last date of this year is how much? 30, what is 31st March 2025 is the last date. Balak, tell here, clear?
Yes, sir.
So we will allow. I believe that you are not able to see this. Hmm. Okay, sorry. Now we will allow if you have received this royalty within 6 months from the end of the year. So within 6 months is from this date, just add 6 months. So we can give you this much grace. So if I add 6 months to it, from March you will add April, May, June, July, August, September. What you will get? 30th September,
6 September.
correct? So you should have received this amount. So you are giving a deduction of 2 lakh, but at least this 2 lakh you should have received it up till 30th September 2025. Sorry, this amount of royalty, this 240. So this amount you must have received. So tell me now, if you can see what they have written, the expenditure income for earning the income is 40,000. Okay. The amount remitted to India till 30th September 25 is how much? 2,30,000.
230.
Now you understood why they have given this information? This date. This date is 6 months from the end of the year. Got it? Everyone?
Yes, sir.
Sugandha? Subiksha? Got it?
Yes, sir.
And how much we have received it? We have received only 2,30,000 rupees, the royalty. So this 230. So what we need to do over here? So we cannot subtract. Actually, I have done what we need to do is I cannot subtract 240 from 40. I have to take this amount as 230. Right? So whatever the royalty which I have received, first of all, it should not be more than 15%. So 15% amounts comes to 240. Then the second thing, this royalty, the amount of royalty which I am receiving, it should be within 6 months. So within 6 months, we have received only 230. So 230 minus 40, it will become 190. Understood, guys? Now 190 or 3 lakh, whichever is lower. So we will get 1,90,000 reduction. And remaining is your 58,000 is your total income. Please write it. Let me know once done.
Sir.
Very good. Okay. RRB is same. There's no problem. ATTTA, TTB. Okay. Let us do quickly one question on that as well. Mr. A is a resident individual, age 61 years. Okay. He's a resident, age 61 years. So please tell me for him, TTAs would be there or TTB would be there? TTB.
TTB.
So can he claim both of them simultaneously? No, no, no. So only the
No.
people who are non-senior citizen, who are not achieved the age of 60 years, up to 59 years, they can only take TTA, they cannot take TTB. And even non-resident cannot take TTB. For non-resident, it is only TTA. So TTB is only for senior citizen plus resident. And how much is the maximum deduction in TTB? 50. And TTA 10,000. You all know it. We have done it so many times that I believe that you all now have mugged up this. Okay. So Mr. A is a resident individual. I'm so sorry. Age 61 years. Has earned business income as 1,35,000. So his business income is 135. His lottery income is 120. And he also has it is written gross income. So it is not net. What is the TDS rate on lottery? 30%. Correct?
3%.
30. Okay. But this is the gross amount. So 1,35,000 is his business income. 120 is his casual income, so, less lottery income. He has a fixed deposit interest of 30,000 with the bank. Okay. Guys, fixed deposit in 80 TTB, all kinds of deposits are allowed. Whether it is your saving account deposit, whether it is your fixed deposit, whether it is your recurring deposit, any bank deposits, all are allowed. Post office, cooperative bank, or other banks, they all are allowed. But in TTA, all deposits are not allowed. Only saving bank account deposits is allowed. Got it? So TTA is a restricted section. TTB is quite a broader section. TTA, only saving account interest is allowed. TTB, all interest are allowed. This guy would be taking TTB, so he can get the deduction of this. He invested an amount of 150 in the PPF. 1,50,000 he has invested in PPF. Okay. What is the total income of Mr. A for assessment year 25-26 if he has exercised the option of shifting out of the default tax regime? So we need to compute his total income. Okay. So let us compute his total income, Mr. A, and he is shifting out of the default tax regime. Okay. Guys, he is depositing 1,50,000 in PPF. Tell me the section.
ATC.
ATC.
ATC. ATC he will get. Okay, tell me if there would have been interest on PPF. Interest on PPF is which type of income? Let's say, for example, in this question, it would have written that he is getting interest on PPF, let's say 12,000 rupees. Which income it is? PPF is an investment and 12,000 rupees
So
is
it is IFOS, but it is exempt. Sir.
very nice.
Exempt income, sir.
Very good. So see, other interest will go in IFOS, but PPF interest is IFOS and exempt. But however, exempt, very nice. So it is exempt under section 10. Okay. Now let us quickly do this question. Not that difficult, but important. Illustration number 19. Computation of total income. Let's say I'm directly doing it. So this guy has PGBP income. It is given to us that this guy has a PGBP income of how much? 135. Lottery income 120, that is gross. It is not net, so it is gross. So we are okay with it. And 30,000 is IFOS fixed deposit. Uh, 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 150. So his GTI is coming as 285 minus chapter 6. ATC, PPF. How much he is depositing? He is depositing 1,50,000 PPF. Guys, will you be able to give 1,50,000 reduction of ATC?
Yes, sir.
My GTI is 285, but can we give 150 deduction in PPF? See, in ATC, 150 is allowed. But you should also know that in GTI, there is some special income also now. Long-term capital gain, triple 1A, or casual income. So we can give all these deductions. This chapter 6 is available only from my normal income. You all understand. Just see at the back of the mind, just see that how much is my normal income. So, or otherwise, just see that what is my special income. Is there any special income is there? So special income is
Lottery.
120 because now you are little grown up now in income tax. You are now grown up. You are now matured. You have done most of the things now. So you can just see that does it contains any special income, long term capital,
Yes.
triple 1A or casual. So it has 120 as the casual income. So this will be 1 lakh how much? 65, right?
65, sir.
So your chapter 6A cannot be more than 165. Correct. So ATC 150, we are okay with it because we are not going beyond 165. Now there is 80 TTB also there. because since this person is a senior citizen and a resident, TTB is also there. And how much is 80 TTB is the interest on deposits. So this interest on deposit can be fixed deposit, it could be recurring deposit, it could be saving account also. For rupees, we have 50,000 as the limit. So how much is the interest on deposit? 30. The interest on deposit is 30, and 50,000, whichever is lower, it is 30,000 rupees. Correct. And now you will see, actually, now we are going beyond 165. You remember 165, you got it. That is your normal income. So here you are actually going beyond 165. So you have to restrict yourself to 165. So deduction cannot be more than, first add them, or in such case, you can show them in the inner column. In such cases, you can show them in the inner column, and you cannot go beyond 165. I believe, guys, everybody is okay with this. Everyone is okay.
Yes, sir.
So my total income would be 1,20,000. Aru, you have done deduction chapter? Arup, have you watched those lectures, 4 lectures of deductions? I'm just asking if you have even not done that, it's okay. She's silent. Okay, now total income is 120. So although we don't have to calculate the tax, but guys, what would be the tax on this 120? Will it be zero or there will be some taxes?
30%.
Correct. Because this is actually how we calculate taxes. From our total income, we see if there is any casual income. So we see that if there is any 111A, there is any 112, there is any 112A, these are long-term capital gains. We see if there is any casual income, and we see remaining income. So we don't have any 111A, 112, 112A, but we have casual income of 120. We have casual income 120, remaining income is zero. So now there is, for we understand, for individual or HUF, if they are resident, then there is a concept of unexhausted basic exemption limit. If my remaining income is less than the basic exemption limit. So this guy, what is the basic exemption limit for him? Can you tell me what is the basic exemption limit for him? He's following default or optional? He's following optional. In optional regime, we have the basic exemption limit of
5
2.5,
lakhs.
2.5, 3, and 5 lakh, right? So now it depends on the age of the assessee. So 2.5, 3, and 5 lakh. So Gandha, it depends on the age of the assessee. So if the
3 lakh.
assessee is a senior citizen and resident, it would be 3 lakh. Super senior citizen, 5 lakh. So here, remaining income is zero, and the basic exemption limit is 3 lakh for this guy. 3 lakh, I'm not talking about, I have not taken this 3 lakh from the default one, not from the default regime. I've taken this 3 lakh from the optional regime, senior citizen. Okay, so 3 lakh. So this unexhausted limit can be taken from capital gains, can be taken from 111A, can be taken from 112, can be taken from 112A, but it cannot be taken from casual income. So my remaining amount is zero, it will remain zero, it will lapse. So we don't have to do anything. We cannot move anything from a casual income. And on casual income, we have to pay tax 30%. So the tax would be tax on above. Although this question is not asking it, but still I'm just doing it for your knowledge or reference. Tax on above at a rate of 30%, 36,000 plus 4% health and education cess, 4% cess.
1,440.
1,440.
440.
Correct. Vignesh, very nice. 1,004. Where is Sumanyu these days? Ask Sumanyu and Kaushik also come in the morning. Siddharth, ask Sumanyu and Kaushik also. And 37,440. 30,440 is your tax liability. Now, since you know the TDS is also there, since you know, because if there is lottery, then 100% you understand we have a TDS sections. 194B is there. If Even if you don't remember that section, that's fine. But you should know that what is the limit on that, what is the threshold limit, what is the rate of TDS. So in lottery, the threshold limit is 10,000 rupees. If you receive the lottery or game show, from game show quiz, etc., more than 10,000 rupees, and here you are receiving 120, and there is a TDS rate of 30%. So, and they have written that gross amount. So it means, and even they would not have written it gross or net, we understand that there is a TDS also now. So minus TDS, because TDS has already been deducted on lottery, TDS on lottery. If you don't remember the section 194 be there, that's okay. Just write TDS on lottery. How much? 36,000. So 1,440 would be your tax payable. Guys, everybody's okay till here? In this question, it is not required to compute the tax payable, but in case if this would have been there in the examination, this is how you have to show this. Guys, let me know once we need to proceed.
Done.
Done, sir.
Very good, very good.
Sir.
Guys, I want to touch upon, let us quickly do. See, illustration number 20, we are not doing it just orally. I am telling you some points. This guy is 42 years of age. Okay. And he has salary income 550 computed. Computed means we don't have to give any standard deduction. It is computed salary income. He has earned interest of 14,000 on the saving bank account. Saving bank account. So saving bank account, we understand 80 TTA would be there. TTB could also be, would have been there if this guy would have been a senior citizen, but he is not a senior citizen. So TTA would be there over here. How much TTA we can give? Maximum 10,000 rupees.
10,000.
14,500 first include in his IFOS, make the part of GTI, and after that give TTA deduction. So this is easy. Then double A. Do you want to revise 10 AA also? SEZ unit? Okay.
Yes, sir.
Okay. Quite an important question. Or one of the examiner's favorite. One of the examiner's favorite. They keep on giving this 10 AA question. But this 10 AA again is not available in default regime. It is only in the optional regime. So this says, Mr. Y furnishes you the following information for the year ended 31st March 25. Total turnover of unit A located in SEZ. So there is a SEZ unit, which is unit A, and it is 100 lakh is the turnover. It's not profit. It's just a turnover. Profit of business of unit A is 30 lakh rupees. Guys, this 30 lakh is our PGBP income. First, make it your PGBP income. This 30 lakh is the profit from that SEZ unit. So let's say you have a unit in SEZ. Let's say in your city there is an SEZ area and you have a unit there in SEZ. The turnover is 100 lakh. 100 lakh is not your income, but the profit from that unit is your income. So that 30 lakh is your PGBP income. Export turnover of unit A received in India in convertible foreign exchange before 30th September 2025. 10 AA also says the same thing. What I have told you in 80 QQB, it also says the same thing. That this export turnover must have been received if you want to give deduction of 10 AA. This export turnover would have been received within 6 months from the end of the year. So end of the year is 31st March 25. 6 months is 30th September 25. Okay. So this is the turnover which we have actually received till here, 50 lakh. Total turnover of unit B located in domestic tariff area. Domestic tariff area is any other normal area, not SEZ. So this is the turnover of domestic tariff area, 200 lakh. This is also not my income. It is just a turnover of the other areas, normal India. It is not SEZ. Profit of the business of unit B is 20 lakh. So this is again my PGBP income. So if somebody will ask me what is my PGBP income, I will say that actually I have two units, unit A, unit B. Unit A is located in SEZ from where I made 30 lakh rupees. This 30 lakh I'm talking of. And I have a unit in normal India, that is domestic tariff area. Normally, wherever you open your unit, which is not SEZ. So I made 20 lakh from there. So you will say that I made 30 plus 20. PGBP income is your 50, 50. Okay. Compute the deduction under 10 AA for assessment year 25-26, assuming Mr. A commenced the business of SEZ and DTA in the year 2019-20. Okay. So he has commenced the business in 1920 and Mr. Y has exercised the option of shifting out. Shifting out means 10 AA is available. Although they have just asked for the deduction, but still I would like to compute the total income of the assessee. So how you should do this? So please, we can quickly do this as well. Illustration number 21. So they have in your examination, please only write what is asked in the question. So it is asked that what is the deduction available, but just for your reference, if they would have asked the total income, so what would have be my answer? Computation of total income. Computation of total income of so and so. Assessment year 25-26. Previous year 24-25. Optional regime. So first of all is PGBP income. Unit A, how much he has earned. Unit B, unit A is SEZ. Unit B is DTA, domestic tariff area. How much he has earned. So from unit A, this guy has earned 30, and from unit B, he has earned 20. So it is 50 lakh is his PGBP income. Understood? We have not been provided with any other income, no capital gain, no IFOS, nothing. This will become our GTA. Everybody's okay with this? Done till here?
Sir.
Now, we will say less deduction under section 10 AA. 10 AA is that if you have a unit in SEZ, then whatever the profit you have earned, how much profit you have earned? You have earned a profit of 30 lakh rupees. You have earned a profit of 30 lakh rupees. You can get this deduction only related to SEZ profit, not DTA, guys, not for DTA, only related to SEZ 30 lakh rupees of deduction you can get. But it should be related, this profit, we need only that profit which is related to SEZ, of course, but which is only related to export, only related to export. So we have to see that this 30 lakh profit when we have earned, 30 lakh profit when we have made, so we have sold these goods or services within India or outside India. So if this profit comprises of within India also and outside India also, so we need only the deduction would be only the profit which you have earned from export, that is from outside India. So how we will do it? We will proportionate the sales. We will take the proportionate amount that out of this 30 lakh, how much was the sales related to? How much was the sales related to domestic and how much is the sales related to export? So if I'll say that 10% of the sales are domestic sales and 90% of the sales are actually through export, through outside India. So out of this 30 lakh, 90%, 27 lakh should be the deduction. So how we compute this 10% or 90%? How is any fraction or any percentage is computed? So we have to see out of, so let's say if somebody will ask you that how much marks you have obtained. So out of the total marks, how much the marks you have obtained, you will write in the numerator. So how much is the total marks? Total marks is total turnover of SEZ, not the total turnover. Don't take anything of DTA right now. While giving this deduction, we are only concerned with SEZ. So what you will say? You will say the total turnover of SEZ, out of which how much is the export turnover? How much is the export turnover of SEZ? This is how you get that 90%, 80%, whatever it is. This is how you get this fraction. So export turnover of SEZ upon total turnover of SEZ into, and what you will do, that 30 lakh, you will divide this 30 lakh, you will divide this in this ratio into 30 lakh. That is the profit of SEZ. Guys, are you able to recall it? Profit of SEZ.
Yes, sir.
Now, if you are in the first 5 years, if you are in the first 5 years from the starting of your business, then you will get 100% of this amount. You will get 100% of this amount. If you're in the next 5 years or next 5 years, then you will get, because you get a tax holiday for 15 years. So in the first 5 years, it is 100%. And in next five, it is 50%, 50%. In last five, there is one more limit also, which is not relevant. Transfer to SEZ reserve, which is not relevant. You will maximum get in first five or in the second five. Even in third five, if you will get that you are in the 11th year, 12th year, 15th year also, so just take 50% of the amount, or amount transferred to SEZ reserve, that will not come. Now, let us see that in which year we are. We are in previous year 24-25. So let us see in which year we are. So we have started the business in 1920. So 1920 is the first year when we have commenced the business. So 1920 is the first year, right? Then 2021, just do it roughly. 21, 22, 22, 23, and 23, 24. And we are in 24, 25. We are in 24, 25. So first, second, third, fourth, fifth. We are in the sixth year. So we are in the sixth year. So it would be 50%. I believe you are okay with it. Anybody, if you want to repeat, I will repeat. So this would be 50% because why? We are in the first, not in the first five, but in the set of second 5 year. Now, also the last point is that export turnover. When you will be writing this export turnover only you will write whatever is received within 6 months. Either it is received within the year, or at least we will give you a grace of maximum 6 months. From the end of the year, maximum 6 months we will give you the grace. Okay. Now let us write these figures over here. So the total turnover of SEZ was how much? The total turnover of the SEZ was, see, it was given na, total turnover of unit A, SEZ was 100 lakh. So in the denominator, I will write 100. Export turnover of unit A was 50 lakh. So export turnover is 50 lakh. So I should write 50 lakh in the numerator. And they are also saying that this is the turnover which is received on or before 30th September 25. Again, I believe that you are able to recollect this date. You are able to connect this date. Why they have given this date? This is 6 months from the end of the year. 50 lakh. So if they would have told me that the export turnover is 60, but out of the 60 only up till 30th September 2025, only 50 lakh is received, then also I should write only 50 lakh. So whatever is received within the 6 months. If they're silent, I would assume that all the amount is received. If they're silent, so we always assume that the entire amount is received. And profit of the SEZ is 30. So 50 upon 100 is 50%. So 50% is your export. So what does it mean? That 30 lakh which you made from this SEZ unit, actually from your export, it is coming 15 lakh only. So 15 lakh you will get the deduction. But into, if this would have been first 5 years, I would have given the entire amount. If in the next 5 years, it is 50%. So 7 lakh 50,000. Anybody? Arup, you were saying something? You were saying something?
I was saying 7.5.
7.5. Good, good, good. You got it ना? अरूप
Yes, sir.
आज साफ आ रहा है कुछ ब्लर्ड हो रहा है या अभी ठीक है?
No, sir, it is clear.
Good, thank God. Yesterday night I was struggling with my IT guy. Okay. 50 minus 7.5.
42 lakh 50.
50 minus it's 42 lakh 50.
42 lakh 50.
This is your total income. Understood, everybody? Yes, 10 AA is an important deduction. So please, first of all, let's say if they have asked only the deduction, then we have to show this much. We have to show this much. Only this much. Actually, in this question, they have asked only this much, right? And we can just write a note over there that this we are in the 6th year, so that is the reason we are taking 50%, right? And if they would have asked the total income, so please remember that whatever the amount you are receiving of the profit, whether it is from SEZ or from DTA, first of all, it is your profit. See, and there is nothing to learn, guys. There's nothing to learn. It's very logical. Let's say a guy is coming to you, a client is coming to you, and he says that, boss, I have one business in SEZ, I have one business in non-SEZ. Non-SEZ is DTA, domestic tariff area. So in fact, most of the India, 99% of the India is domestic tariff area only. So right now where I am sitting, right now where you are sitting, that is DTA only, domestic tariff. See, the name itself is saying domestic tariff. What is domestic tariff? Where normal tariff is applied. Tariff means taxes, where normal taxes are applied. But in SEZ, we give you deductions. We give you deductions. So here we give you deductions of income tax also, 10 AA, tax holiday is there. I will tell you in the chapter of place of supply in GST. In GST, in the chapter of place of supply, I'll tell you that in SEZ also, there is no GST also. The people who are actually giving to SEZ or SEZ is giving to someone, there would be no GST also. So why? Because normal taxes are not applied in SEZ. Are you able to relate it? Normal taxes are not applied. You get a benefit in, see the name itself says SEZ. What is the full name of SEZ? Tell me.
Special economic zone.
Special economic zones.
Economic zone. So they are economic. Economic means that you will save your money over there. How you will save your money? Government will say that we will give you incentives. We will give you incentives in income tax, NAA they have given. We will give you incentives in GST, that we will see in GST also. Okay. Now, this is the income. Okay. I believe that you are done with this. I would like to discuss one more point today and then I'll wrap up. Okay. Guys, you know now there is a deduction of 80 CCD. What is 80 CCD about? New pension scheme. Correct. This is about new pension scheme. New pension scheme is that assessee is depositing it, the amount in new pension scheme, or if he's employed, so his employer is also depositing the money over there in new pension scheme. But what happens is sometimes, let's say for example, when this NPS gets matured, and once we receive the money from this NPS, the lump sum money which we are receiving from the NPS, it might be the case. Let's say, for example, there is a guy, this person was, let's say, he's an employee of some company or he's an employee of government, whatever it is. Let's say, for example, he's working with some company or organization, government, he's a salaried person, you know. So let's say, for example, what happens is this guy was 25 years of age and he joins an organization, whether government, non-government, doesn't matter. He joins an organization and his organization has opened an NPS account for him and he's also contributing, his employer is also contributing. Correct. And let's say now he's 25, 26, 27, 28, etc. Let's say he turns out at now, let's say now he's 52 years of age. So still he will get retired at 60, but right now he's 52 years of age. So almost for how many years he has worked with this organization? Almost 20 years or so he has worked with this organization. So he is now 52 years of age. Now, guys, there would be a good amount in the NPS. Yes or no? Right now, there would be some amount in the NPS, right? Because he's contributing when he was young, when he got the job, he was contributing. The employer was contributing. Now this person is 52 years of age, but yes, still he will work. But let's say, guys, this person died. He met with an accident and he died. So what will happen to this amount? Obviously, his legal heir will receive it. His legal heir will receive this money. So what is the taxability of that? When they will receive this lump sum money, what is the taxability? Understood? Case 2. Let's say, for example, he's not died. He's not died. He is now 60 years of age and he retired. And now, since he retired, so now he would like, and now there is a good amount in NPS, and now he would like to close this amount because now he would be taking this amount from NPS and he'll be depositing somewhere else. So now he's closing his and he's withdrawing the money from his NPS. So when you are closing your NPS, you will get a lump sum amount. Guys, are you understanding what I am saying? So I am actually telling you that what is the taxability of the lump sum amount. So let's say, for example, you get a client today, and he's 60 years of age, and he is telling you that when I was young and when I was in my service, I was contributing the money, or I was, let's say, employed. My employer was also contributing the money, and this year actually I got retired, so I took the money. I have closed my NPS and I have took the money out. So let's say, for example, he received 70 lakh rupees. 70 lakh rupees. So he's asking you, sir, ma'am, whether this amount is taxable or it is not taxable. Guys, are you understanding what I am saying? So I am discussing with you. Are say yes or no, na?
Yes, sir.
So I'm actually telling you that what is the taxability on withdrawal? What is the taxability on withdrawal? Or let's say I am taking third case. Let's say, for example, he is now 35 years of age. He joined the organization in 25. He's 35 years of age. And now he has some money in NPS, but he's partially withdrawing the amount. He's partially withdrawing the amount. Has some amount, but he wants some money urgently. So he says that we have certain investment in NPS and I'm partially withdrawing this money. So, what is the taxability in these cases? When he's died, this person is died and the money is received with the legal heir. Is it taxable or it is not taxable? If he's closing this NPS, he is receiving some money. Let's say, for example, he is receiving 70 lakh rupees. Whether this 70 lakh rupees is taxable or not. Let's say, for example, he is withdrawing some partial amount. Let's say, for example, he is withdrawing 20 lakh rupees partial amount. So, whether he is asking this 20 lakh rupees is taxable or not. So, right now you can just see it, although it is in your notes in your book, page number 10.6. See, taxability on withdrawal of NPS. When you withdraw your NPS, so amount received on death of the subscriber of the nominee, that is fully exempt. So, if the that person died and their legal heirs are receiving this money, so if this legal heir are coming to you, they're coming to your office and they're telling you that actually it was my father, it was my mother, they were having NPS and unfortunately they expired and now we have received this money. Let's say, for example, they have received 70 lakh, 80 lakh, 90 lakh, 1 crore, fully exempt. Everybody is okay with it, fully exempt. Second thing, if the person is not died and he's now 60 years of age, he's closing his NPS. He's closing his NPS and he's getting the money. So amount withdrawn by the assessee himself is withdrawing or herself is withdrawing the money. So when he's withdrawing the money on the closure of the scheme, now he's closing the NPS altogether. Why? Because now he don't need the NPS. He is getting retired. Guys, 60% of that sum would be exempt under section 10. No need to remember this 12% or 12A. Section 10 says 60% of that amount is exempt. Just only don't remember 1640 both. Just remember that how much is exempt. 60% is exempt. So In this case, if he is coming to you and is saying, sir, I am now 60 years of age, I am retired, now I would like to withdraw my amount which I have invested in this. And now if he is withdrawing 70 lakh rupees, please what you will say, that how much is taxable? 60% is exempt, 40%, 28 lakh would be his taxable income in this year. Understood or not?
Understood, sir.
This percentage you have to remember. In case of death, nothing. In case of closure, 40% is taxable, 60% is exempt. Remember either one of them. Let's say, for example, there are very less chances that they will ask you this. And even for partial, there are very less chances. They might ask you this, they might ask you this, which has a little chances, but yes, I cannot ignore it. If it is partial withdrawal, then it says that if you are partially withdrawing it, then only 25% would be exempt, 75% would be taxable, right? You just remember either one of them, If you are just remembering taxable thing, remember that in case of closure, 40% would be taxable. In case of partial withdrawal, 75% would be taxable. Understood? Last thing is that it is 75% is taxable for salaried assessee. But if the person is a non-salaried assessee, because if you remember 80 CCD, today it can, because when CCD was started, it was started for central government employee. Later, if you remember this, I was telling you in your classes that it was started for central government employee. Later, it was introduced for state government employees also. Later, it was introduced for other employees also who are not government employees. And later, it was introduced for all the people, even if you are employee or even if you're non-employee. Let's say you have a business, you can also get your NPS open. Let's say a person who is withdrawing it partially, he's a non-salaried assessee. In that case, whenever you withdraw it partially, 100% is taxable. 100% is taxable. Everything is taxable. So, guys, this is little percentages which I want you to remember. You have to learn this percentages. In case of death, nothing is taxable. In case of permanent closing it, 40% is taxable. In case of partial withdrawing it, you are still continuing with the NPS, but you are withdrawing it partially. NPS gives this particular benefit that if you need, then after some time you can withdraw the amount partially from your NPS. In that case, if in case of salaried assessee, 75% is taxable. In case of non-salaried assessee, full amount is taxable. So there is actually a question in your study material. Question number 1, page number 102. Question number 1. These points are easy. One of the point was okay. Now, fifth, read it out. Read it yourself. Sheila, widow of Mr. Satish, who was an employee of XYZ. So Satish was working with XYZ and he died. Now, Mrs. Sheila, widow, received 7 lakh rupees on 1/5/2024, being amount standing to the credit of Satish NPS account. So Satish was an employee, but unfortunately he died. And he has a 7 lakh rupees credit in his NPS account. In his NPS account, 7 lakh rupees was there. And now it has been received by Sheila, his wife. So, in respect of which deduction has been allowed in 80 he has taken the deduction of 80 in the earlier years by Satish. Satish, whenever he was contributing, his employer was contributing, they were taking deduction of 80 right? But this amount was getting deposited in NPS. And right now, this amount is 7 lakh rupees. Such amount is received by her as a nominee on the closure of the account, deemed to be her income. Is it her income or not? Now you have to examine that whether
Yes.
it would be his income or it would be exempt. So in this case, you have to write that in case of closure of NPS, due to death of the person, and if his legal heir are receiving the amount, that is 100% exempt.
Exempt.
So this would be exempt. Understood, guys? So I think that we can keep it till here today. and we'll meet tomorrow at 7:30. Bye. Take care.
Thank you, sir.
Thank you, sir.
Bye. Bye. Bye.
Thank you, sir.
Bye.
Thank
Bye.
you, sir.
Thank you, sir.